just this week alone, the market went from impending recession, World War III fears of a huge crash between 20 to 30%, and then euphoria. And the market went from fear all the way back to greed within 1 week. And it's like all of the FUD news, all of the market crushing doom and gloom news is done. So what do we do when the market is more irrational than me? When I haven't eaten in 12 hours. And in that instance, I just like to look at the legendary Warren Buffett and see his quote, "Our favorite holding period is forever." That's right, we just forget about the day to day and we think in long term. So let's discuss 2 undervalued top stocks that I am buying for the long term to add to my portfolio. Raylan here to save the world and make you healthy and wealthy. And in this episode, it's going to be a juicy one. Now, for investors to have a bulletproof, recession-proof portfolio when the stock market is literally so fearful, we need to think of a long-term time horizon. So let's get rid of some of that fear with data, facts, and strategies. Everything is timestamped, so feel free to skip over to whatever you would like to see. In this video, we will discuss 2 highly undervalued long-term stocks to buy that I believe could 2x from here. Like, no joke. They are very underrated, very undervalued. And I'll tell you why this is happening, because it's not something that you might think it is. We'll also talk about 2 options that I sold this week and why I've been selling options, cover calls, cash secured puts, and poor man cover calls, doing some credit spreads, and what I think about the macro trend in that. We'll also talk about Google, the alphabet of the Google versus Tesla earnings, and what is going on between both of them. And last, I will talk about the dividends that I collected this month and what you can expect from your monthly dividends. As always, this is an Invest With Me show where you can use my dividend tracker linked below to help you track your dividends with me. I have not updated this in a while, so I apologize, but I am. Comment below and let me know what stocks you would like me to add to this list. I am more than happy to do so for you. And just let me know any questions you have in regards to either dividends, option selling, or earnings reports. I'm also planning on doing an option selling tracker. Now, as you can see, I update this weekly, so I'm going to update this for you. Once you have the link, you should be able to have it. And then you can see your dividends versus the month, and you can see your overall total gains and your annual total. So let's get started with the undervalued stocks. I think you're going to be interested in my pick. Highly undervalued stock I bought this week was Starbucks. Starbucks has been through the ringer this year between boycotts all over TikTok and supposedly low growth in China. Starbucks just cannot catch a break, and it's actually down year to date, negative 5.53%. To put that into perspective, SPY, or the S&P 500, is up 7.73% yield to date. So it is paling in comparison. And if we look at the max right over here, it looks like it's in a support area. Like, it's still trending up, which is very nice, but it also is showing that it is in a dip. But obviously we have a lot of all-time growth, which is good to see for one of our growth companies. This is what we want to see. We want to see it go up when it's going off to the right. And make sure whatever stock that you buy, that it does have at least a 10-year track record. We need to make sure that the fundamentals are there. The Starbucks CEO basically blamed 3 headwinds for the disappointing results in Q1, which was war in the Middle East, weakening its local licensee sales, misperceptions in the US over the company's stance on the Israel-Hamas war, and a more cautious consumer in China. So basically, people are boycotting because of the company's supposed stance on the war, and also because of the geopolitical tension in the Middle East that's weakening its local licensee. So be very prepared for volatility and turbulence in the stock price if we hear any more news surrounding this. So very much in the Middle East, they do have a big presence there, so it will impact the stock price. And then again, there's a perception about the consumer in China is weak. We saw that as well in Tesla's reported earnings when we saw that China growth was not very good for EVs as well. And I'm seeing that along the lines of every company that's in China, so it's not just for Starbucks. Executives also tried to convey that those challenges are expected to subside as fiscal 2024 progresses. So they're saying that these are short-term headwinds to not worry about it, so they can clarify their position and they can stop with the boycotts and just have overall more growth for the year. While Starbucks lowered its full year outlook for revenue and same-store sales growth, it reiterated its forecast for fiscal 2024 earnings per share growth. Honestly, that's what I took out of the Q1 earnings, was that despite all of these headwinds, the numerous FUD that is happening with all of these articles all over TikTok, that it's basically just deployed to help unionize the workers. You know, they have a wonderful brand. They have brand loyalty. You cannot have enough coffee. And what do you think of coffee? You think of Starbucks and Dunkin' Donuts. And while these are difficulties, I think that there's actually another reason that the stock price is down as well, and we'll get into that in the next part. To make matters worse, Starbucks has been in a standoff with its employees for a whole year, and this is basically where I think that the stock price is getting pounded on, because it is trying to have standoffs with unionizing. So it's a Starbucks and union restart contract talks after bitter standoff. The company and workers united, which represents more than 10,000 of the chain's employees, broke off negotiation nearly a year ago. And we have just been seeing the stock price go down for mostly the whole year. And I think it does have a lot to do with the unions. But 2 days ago, this article came out, and I think it's very important. Represents over 10,000 of its workers returned to the bargaining table on Wednesday for the first time in nearly a year, a pivotal moment in the year-long battle between the coffee giant and its organized workers. And both sides are basically saying that they're very excited about this, and they're excited about the future, and it's very positive. The union is asking for higher wages and better safety standards, among other issues. Once the two sides agree on an overall framework, individual contracts will be put up. The separate contracts will allow the company and workers to raise issues that may vary by region or type of store, so it will be very individual. So this is very good news for Starbucks, and as I said, I think this was a short-term headwind. I think that a lot of the stock price was baked into this, as there have been many boycotts because of the unionization. There also is another struggle, which I will talk about later. So I'm very excited about this, very hopeful that the negotiations will go well. So now that we've looked at all of these short-term headwinds, let's look at the financials and see if there's been any material impact to the cash flow from all of this negativity. So we're going to look at macro trends, and we're going to see the 10-year trend. We want to look at least 10 years of data to see the overall trend and just make sure that everything is going smoothly and that the company is growing, because if we want to hold this for the long term, we need to know what the financials are doing in the long term. The first thing we want to look at is the revenue from 2010 to 2023. Revenue for the quarter was $9.42 billion, a 8% increase year over year. Trailing 12 months was $36.68 billion, 11% increase year over year. And I love to see this. The trailing 12 month is just increasing. The revenue has just been going up, and it looks like it's almost 4x'd. So let's look at net income, because this is what the company's net profit or loss is after all the revenues, income items, and expenses have been accounted for. So for the quarter ending, it was $1.02 billion and 19.78% increase year over year. Trailing 12 months is $4.29 billion, a 29% increase year over year. And if we look at the trend of the trailing 12 months, it did have a little bit of turbulence. It looks like it has some turbulence throughout the years, but mostly it has been going up, 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 up and away. The shares outstanding was a 1.07% decline year over year. Beautiful. So the outstanding shares are just decreasing overall. That is beautiful. We love to see that, because it means that we get a bigger portion of the pie as shareholders. Another thing that I love to see is the gross margin, because it basically means what are they getting from their profits? How much are they making? If this trend is going to go up, and it goes up and to the right. That is just beautiful. So here we have the gross profit, gross revenue, and gross margin, and it is just going up, 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 up. It did experience better margins in 2019, but then you know what hit. But it's been going on an uptrend ever since, which is what we want to see when it comes to gross margins. And it looks like this is a pretty rational margin. And Starbucks has a very solid dividend yield at 2.57%. It is in a lot of the dividend ETFs because it is growing its dividend. It's doing a very good job with that, and it has a reasonable yield. So with all of the headlines, why am I buying this company for my long-term portfolio? And as you could see, basically the story that they're telling right now, which I believe are short-term headwinds, Starbucks is mostly in the United States for right now. So even if it is in the Middle East, which they are trying to ramp up and grow, I believe that they'll still be able to do that. They have a really good management system, and they'll just be able to grow more in the United States or pivot to another region if they need to. But I don't think they will. I think that negotiations will be great as far as the licensings go. I think they have a really good team and management behind them to figure that out. Also, as far as the boycotting goes or the unionization, as we saw with the article, I think that they're in negotiations with that and they're in a positive light. They have very good brand loyalty. And as I said, I think it's interesting because it's definitely a cross-generational stance. So Starbucks, the corporate people, the Starbucks moms, they might not love the taste of it, but they love the convenience of it. And they love that they can get customized coffees using their hidden menu and using their customizations to get hooked on Starbucks loyalty. And I think that's a very good move with management. But as I mentioned before, I do think there's something else that is causing this stock to sell off. And it is this chart right here. Let's look at the 10-year. Now, this is from Trading Economics. This is the coffee bean price. And as you can see, there are so many commodities that are just going all the way up that have been going up within the past year. You can see that 2024 was at about 180. And now it's all the way up to 229 with, it's just inflation prices. Yay. This is the 1 year. It's just spiked like crazy. I'm not saying that this is its all-time high, but we haven't seen this in a very long time. So I think this is what's spooking the market as far as Starbucks goes, because once these prices go up, it's a really good indication that Starbucks will have to gather more costs and will get more costs because coffee beans are very pricey right now. If we keep getting higher inflation, they're just going to keep going higher. So this is another thing just to look out again for short term. If there is more inflation and inflation is kind of sticky right now, then the stock price may go down because the commodity of coffee beans are just spiking higher. But again, I believe that this is short term. I believe we will get to a point where inflation will slow down. We will be getting rate cuts at some point, and Starbucks will just continue to go up and commodity prices will go down. And not only that, but their brand and their customers are so loyal that they can just pass on the costs. The customers that they have are either in the corporate world or they're the influencers who are like, I just want a really special drink. They're not very much looking at, let me get the least expensive thing. So they're able to increase and move along their costs onto the consumer. So I don't think this is a big problem. This is one that I am currently buying. Please let me know below if you agree with this, if you see any other headwinds or any other tailwinds, because I think there are a lot of tailwinds coming into the next 10 years with Starbucks. So I'm very excited to own this one, and I love their coffee. They got me hooked, line, and sinker. The second highly undervalued stock I bought this week was Nike, ticker symbol NKE. Nike has not swooshed this year. In fact, it's been going down a huge avalanche. And you can see that from the stock price, which yield to date is down 11.7% year to date. That's in terms of the S&P 500 comparison, which is up 7.73% yield to date. So what's causing this beloved Michael Jordan brand to lose steam? Sleek and bold colored sneakers are no longer in, and the brand hasn't been trending for the past year. And the CEO even said something about this. He's aware that the growth and imagination seem to be an issue at this company. He said that Nike adopted a remote work policy that Donahue said hurt its competitive edge. And this is the CEO talking about it. But even more importantly, our employees were working from home for 2.5 years. And in hindsight, it turns out it's really hard to do bold, disruptive innovation to develop a boldly disruptive shoe on Zoom. The company has been working on a bold, disruptive plan to churn out new products and hopefully reinvigorate excitement for the brand. It's just words right now because the sneaker maker actually slashed its revenue outlook for the forthcoming fiscal year, citing weaker digital demand in the US and stronger headwinds in its key Europe, Mideast, Asia region. So it's basically saying that the forecast isn't looking so good even in 2024, and that last year was bad because of innovation and because of remote work. Besides this innovation problem, Nike is continuing to lay off more than 2% of its workers. In USA Today, it said that 740 workers are planning to be laid off. This is a second phase of impacts that would begin in June 28th. And from last quarter's earnings call, this came from Nike's CEO 2 months ago that we were just discussing, that it was going to reduce its workforce by about 2%, or more than 1,600 employees. So they're basically pulling an Elon right now and just pruning the company to make sure that it is going to be growing in the future. But of course, this doesn't look that great on Wall Street because it doesn't look like they're expanding very well. So let's look at the financials to see if this is impacting their company in a very data-driven way. Because we see that qualitatively, a lot of people are not really going for Nike's brand. You know, they're going for more of the vintage look, or at least since I've been on social media, that's what I've been seeing. They haven't really been going for a lot of Nike's look, which is traditionally the color and the like sleek things. Like it's more of a chunky sneaker that people are looking at right now. So can Nike steer the ship to more innovation? I think they can. I think these are just short-term headwinds, but let's look at the financials to see if that is correct. And again, we will go to micro trends and we will see the revenue from 2010 to 2024. And we can see that in the quarter ending February 29th was $12.42 billion, a 0.31% increase year over year, so not much of an increase. Trailing 12 months was $51.58 billion, a 1.89% increase year over year. Let's look at the 10-year chart. This is more of a 20-year chart. But as you can see, it's going up and right, and it's actually not doing that bad. It's doing pretty well. As we can see, there was a little hiccup right here between the you know what, but it's been doing really well, and it's almost 5x'd in 20 years, which is really amazing. So the outlook looks really good. So let's go to net income, see if we can get more of a story. And it says that quarter, it was $1.17 billion, a 5% decline. And trailing 12 months was $5.23 billion, a 4.51% decline. And as we can see over here, it has been going up and to the right. There were a few hiccups again. It looks like they have to innovate a little bit more. Let's look at shares outstanding. Quarter ending was 2.45% decline. Very, very nice. So that looks so beautiful. That decline looks gorgeous. Okay, so basically if our shares outstanding are going lower, it means that we are getting more shares by doing nothing. We're getting a bigger piece of the pie. And we see that the gross margin has fluctuated off and on. Looks like it hasn't really been going in a straight up and down arrow. That's pretty common for retail. I'm hoping that they can do more of a digital impact so they won't have to use so many same store sales. But overall, it's been pretty similar. So we have between 43 to 47%. So it has been pretty consistent. Nike seems to be having an innovation issue. So why am I buying this? First of all, I think that that's very short-term headwinds. And I think their brand loyalty and followers will follow suit. I think that they have so much brand loyalty that they can basically get any player that they want and the highest quality, highest paid players that they want. And Michael Jordan is making bank off of his deals. So a lot of the all-star players would love to get a brand deal from Nike. So it's kind of like a win-win situation. And Nike is putting their money where their mouth is, where it says Caitlin Clark lands historic $20 million shoe deal with Nike that includes signature shoes. So they were talking about the pay gap, that Caitlin Clark wasn't getting as much money as the men, and Nike did something about it, noting that she would make it the largest ever for a WNBA player. This is her first major sponsorship as a professional women's basketball player, and this will span over 8 years. And Caitlin says, "I'm humbled to be part of this first Nike basketball class and passionate about inspiring the next." She's the number 1 overall in this month's WNBA draft and is expected to make a total of $338,000 in her first 4 years in the league. That's compared with the NBA's most recent number 1 overall draft pick, who is expected to earn $55 million. So I think this will have a big impact on Nike sales. And I think, as I said, because of their brand loyalty and because every single basketball all-star would love to get a deal with Nike because they know how lucrative that can be. I think if they continue to do this and continue to innovate, this stock will 2x. And I'm very proud to own this company. Stop right now. Thank you very much. If you have been looking to research the stock market, ETFs, individual stocks, or anything in between like bonds, then you should join Seeking Alpha Premium. This is today's sponsor. Thank you so much for sponsoring. I have a discount code below that will give you 7 free days to try out this premium equipment. So join the current 20 million active members and you can get 5,000 plus ideas per month. And all of these articles come from over 18,000 analysts. And not only that, but it has one of the best stock screeners in the world. I use this to research all of my stocks to get a discounted cash flow, as well as researching the bull and bearish thesis, because you want to know what's on both sides. So join today for free for 7 days to try it out. And if you like it, you can also get 20% off. So the market sentiment is so low for Tesla, but it's rocketing higher in after hours after reporting earnings. So what is going on? So let me tell you, it's all because of the earnings call. When you sold Tesla, bought Meta, and sold Google before earnings, yes, sir. Let's go. Missed them all. You missed them all. Yeah. Jesus. That's so cute. There has been so much FUD, fake news, real news, and bad delivery numbers that have just been baked into the sentiment overall. It's just been pounded. This year to date alone, it's still down 32%, and that's after the 16% spike. The 1 year is actually up 5%, but it definitely looks like it's still on that downward spiral. And it has just, the sentiment is so low. Even the bullish of the bulls on Twitter and on here on YouTube have just been like, okay, whatever, I'm out. This is really annoying. Because when you have a bull run in the whole market and Tesla stock just continues to go down, it's very wearing on even the most bullish of the bulls. Tesla missed earnings and went up 16%, while Meta beat earnings like crazy and went down 13%. Let's talk about it. So the results versus expectations for Tesla, and what in the world is going on here? It missed revenue estimate by 4.3%, missed EBIT estimates by 24%, missed GAAP EPS estimates by 8 cents, beat GPM estimate by 8 bips, sharply missed auto GPM X credit estimates. Now for the 3-year CAGR, for a company in retrospect is supposed to grow 50%, it's averaging around the range of 27 to 34% of revenue, auto revenue, cars produced and cars delivered. Now, we've seen a lot of impact with China, and that might have something to do with it. It may be a cyclical stock after all. And then we have margins for 3-year bips are all in the negatives. not good. $26.9 billion in cash and $5.4 billion in debt. Diluted shares a little bit. So they do have some cash on hand and some runway that they will probably need for all of this turbulence. So it's basically all about the forecast and the story of what's going to happen to Tesla in the future. And Elon was basically a leader during the earnings call and definitely set the record straight that yes, they are implementing lower cost cars, which was another FUD piece by Reuters that was proven false by Elon himself. On August 8th, they are going to talk about their robo-taxis. And then third of all, they are going to solve the problem of autonomy. And this was all during the earnings call that Elon spoke about. In Tesla's investor relations, they say, while many are pulling back on their investments in EVs, we are investing in future growth. To maximize the impact of our products, we design and manufacture a fully integrated ecosystem. Tesla is basically going to be in every car, and it's going to be comparable to Uber and Airbnb. And Elon Musk, during the earnings call, said, if you don't believe that Tesla is going to solve autonomy, then you should not invest in the stock, because we will solve autonomy. So despite what Elon's calling these short-term headwinds in China, which he said Tesla suffered the least in terms of EV deliveries in China, which is true if you look at the data. And then Ron Byron, who's one of the OG Tesla investors, he invested in Tesla when it was a little small baby. He said it's going to go up huge. Now is the bottom. Now they have compute to figure everything out. Now you're on the verge of autonomous driving with your car. So let's hear what he has to say.
You sold that stake. You did it because you were worried about the portfolio being too heheavily invested in one particular stock.
It's gone up 20 times, yes.
Yeah, and it's gone up 20 times.
It's around, I don't know, it's around $3.5–4 billion, something like that.
But the reason that you gave in the past wasn't that you didn't believe in it.
It was just too big of an investment.
It was just too big of an investment.
Yes. So I'm always watching.
Just because you're managing other people's money.
But I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be, yes.
The earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive, they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. The reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he said.
Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason the stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason the stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company. That's a company that makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. They don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that that people get entrenched, and they do things without trying to make the things better and cheaper and faster all the time.
What's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital. And they're not going to make the cars direct cost as cheaply as they did before. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
yes.
and a lot of the value is relying on that. The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $200,000, $250,000.
Because of all of the sensors and all of
and they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
Once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like the Tesla charging.
If they're making cars, they make $7,000 in profit a car for a car they sell them for $35,000, minus the $7,500 credit.
But what's your timing? But just give me the timing. That's the whole game.
Now.
Now?
It's now.
So let me know what you think about all of this. If you think Ron is right, if you think that the Tesla bears are right, if you think this is just a car company that Elon can't solve autonomy, if you think the PE ratio is huge, which I personally do think the PE ratio is huge, but I do think they have a very great future ahead. And I'm excited about 8/8 or August 8th when Robo-Taxi presentation will go on. So let's see more about what the future holds for Tesla. We have got to talk about Google and its earnings report. It is up 10% on the day alone. It just broke through its all-time highs. Let's talk about it. So Google stock soars over 12% in after hours after beating earnings expectations and beating like crazy. It did. It had one of the best earnings reports and earnings calls. The company reported revenue of $93.5 billion and EPS of $1.89. Google also declared its first ever dividend. Welcome to the dividend club with 20 cents, which obviously isn't that much, but we're expecting for it to accelerate. That is the first time in history. And it issued $70 billion in stock buybacks. Holy cow. So remember when Google was around $100 and everybody was like, oh my gosh, Google's days are over, their days are numbered, their search engine is very biased, and the CEO is doing absolutely terrible, sending it to the ground? Yeah, me neither, because it is currently at all-time highs. And not only that, but it is currently one of the most fair valued of the Mag 7. If you can see the PE right here, it has a PE of 24 or 20. And as you can see, almost all of the other Mag 7 stocks are higher. And I think Google definitely deserves to have a higher PE. They are the leader in AI. They are the leader in search. You Google it. You don't type it into a search engine. So let's see what CNBC has to say about this.
$1 day. I thought search was dead. I thought ChatGPT was going to kill Google search. But apparently the market begs to differ.
Definitely hasn't yet. I mean, there's everybody worried about the future for Google, but the present always looked good. And the present looks real good for Google. I mean, it has re-acceleration in terms of revenue growth. It issued a dividend. It has a big stock buyback. Sundar Pichai is taking a hard line against people making trouble inside the company, saying, no more. You guys got to get out.
Yeah, it's a workplace. It's a
exactly.
job. Yeah.
And so all of a sudden, the narrative around Apple,
Wow,
around Alphabet, starting to shift. People are starting to say this company remains strong. those worries might come into play, but they're not happening immediately. And now we're looking at it, $2 trillion.
It truly is. I mean, if you're on the radio, folks, Alphabet, Google is up 10% right now. Just a monster move, like we said, best in almost a decade. Going back, 9.5 years, best day since. It did feel, to your point, without getting into the politics of it, Alex, but it did feel like you see all these things that are happening at the company, and people are like, oh, Gemini's got these weird search results, and it's gotten to whatever. Pichai laying down the hammer. I mean, he's dropping the hammer. It's a place of work. You do work, or you go somewhere else. And it feels like that did have a market shift, almost.
Definitely. He had to change the story, and I think he understood that. And so what he did was he fired the employees that had taken over. I mean, it's not like they were hanging out in the cafeteria. They were
or outside the building. They literally took over people's offices.
Look, and their job is not to be paid to take over people's offices. You have to do your work. And if you're going to be occupying the cloud CEO's office, you got to go. And I think Sundar realized in the past they had tolerated some of these protests, and now he realized, listen, everybody's looking at us as a laggard, right? They talked about this Gemini issue.
Best days are behind you,
exactly.
Google, forget about it, right?
And until that was turned around, it was going to be trouble for Google. So today what you have is that narrative is shifting. He's thrown the hammer down. He's written a memo to the company saying mission first, where it's too important of a moment to be distracted. And then, by the way, delivering these very impressive results where they beat on everything. Their profit grew by like 30%, 37%. I mean, it's a time where they're supposed to be dead. They're not dead.
So let me know what you think in the comments below. Like, do you think that this company should be going all the way this year? Do you think that Google or Tesla is going to beat, as far as stock price goes, just the stock price for the end of the year? Which one will win? Now let's talk about our options, or more importantly, which options I sold. The first options I sold this week was ticker symbol TNA. This is the 3x leveraged micro cap. So for ticker symbol IWM, the small caps. I sold a cash secured put for $15 for January 17th, 2025. And I want to explain my reasoning. So first of all, make sure when you're doing cash secured puts for leverage, you only do a very low exposure. So less than 5% exposure. This is about 0.05% of my total portfolio. So just make sure when you're doing leverage, it is highly concentrated in other long-term plays. So I basically wanted to do this because they're lagging behind the S&P 500. The small caps are, the S&P 500 is up about 26% for the year. IWM, or the small cap stocks, is up only 15% for the year. So it has an additional 10% to go. In my opinion, will they see turbulence? Yes, very much so. But I think what's holding them back right now is the inflation and interest rates, because most of the small caps are a little bit more dependent, or a lot bit more dependent on inflation and interest rates. So as long as sometime in the future we get interest rate cuts, we should be okay. And I know they're saying that inflation is here to stay, or interest rates, we might not see them for this whole year. But at some point, there will be interest rate cuts and we will be ready for it. That's why I took a more long-term stance in this one, because it's a longer-term play for me. And I wanted to have theta on my side, which basically means time decay. And also the delta for this was about 20% or 0.2. I have a 20% chance of getting assigned, which isn't very much, but I would be very happy to own TNA at $15 per share. So this is basically my play for macro trends. It's basically for me saying, okay, interest rates, I get it. We're not going to cut them right now, but after 2024, we will. And also the stock price for IWM is down already, and it might go down further, but I'm very happy with owning it at $15. The second options I sold this week was ticker symbol TQQQ, or the 3x leverage QQQ ETF. This is from ProShares Ultra Pro. And the reason that I wanted to go with this one was because Google is up 10%. Meta had great reporting. Meta, which is Facebook, Instagram, and WhatsApp. Tesla, despite having not great earnings, had a really great forecast. And the tech sector seems to not really be that concerned with any recessionary fears. So again, this is more of a long-term play. So I went with TQQQ, a $30 put. I would be very happy getting assigned at $30 for a put. And for December 20th, 2024. Now, I'm very bullish on the tech sector, so I wanted to make sure that this is a very low exposure. Again, it's leverage, so we don't want to do that many of them, and make sure your portfolio is very concentrated in long-term investing. So this only should be about 1% of your portfolio. But I think that the tech sector, the growth sector, QQQ has a lot more runway. But even if it doesn't, this is a bullish play. But if it goes down to 30 and I get assigned, I will just do something called the wheel strategy, which is where I will get those shares at $30 and then sell covered calls on them and just rinse and repeat. So I just wanted to share with you a little bit of my spreadsheet that is for option selling that I'm creating. Basically, it shows you all of the positions. I'm just going to do CSP or cash secured put and covered call and poor man covered call for this spreadsheet, and you'll be able to download it from the link in the description below. I don't have it yet, but I will have it for other videos. So I just wanted you to be aware of that and let me know what options you would like me to go over, what strike prices. Please let me know if you have any questions about option selling. How much I made in dividends this month, and this is an invest with me, so we will use the dividend tracker. I wanted to make a video about this because I know a lot of people are curious about dividends, dividend growth, and high dividend yield stocks, and I'm showing you how much you can make when you use a combination of dividend ETFs and different dividend paying companies that are long-term investing plays. So the first one we have is SPHD. This is S&P 500 dividend ETF from Invesco, and I got $28.45. So let's do this together. So we're going to go to the dividend tracker and just track this. SPHD is currently at $43.24. So I'm going to add this in. I update this weekly, so you don't have to worry about updating this. And my average cost basis is $40. So we're going to copy and paste here. I currently have 100 shares. So that's going to give me capital appreciation of $324. Going to copy and paste the total gain percentage. So far capital appreciation is up about 8%. And then the yield for this is 4.69%. And this means that you get $1.85 for every share that you own. Again, we're going to copy and paste. So I will be getting $185 for SPHD for the year. Ex-dividend date is April 22nd. Pay date is April 26th. And I just like looking at that just to make sure that I actually got the dividends. And I will have all of this updated this week. As I said, it's been a little bit rough. And then I can just put notes over here as I deem fit. And then we also have the months that will pre-populate as well. Okay, and then I got Comcast, $31. It says margin because it's in a margin account. I know a lot of you are asking about that. It's just the difference for Fidelity, whether it's in a cash or a margin account. I do have a margin account. No, this is not on margin. This is in cash because I have a margin account and I have a Roth IRA that does not have margin in it. So this was $31 from Comcast. Then for Sachem Capital, which is a volatile play, is 89 cents, $1.10. Then I also have Stag. They're best known as a real estate investment trust, and they mostly are warehouses for Amazon. That's kind of what they're mostly known for. They've been having a little bit of turbulence because Amazon's been like, hey, we don't really need that many warehouses right now. So $12.43. And then Realty Income, ticker symbol O, $77. Main Street Capital, which is one of my absolute favorites. They are up about 29% this year, which is insane to me. I love this company. $13.13. Also, they do a lot of special dividends, so I also received $59. EPR is another REIT that is most well known for holding AMC theaters. And I got $28.50 from them. A little bit more Stag. I reinvested my O in Fidelity. You can reinvest. And then I also have Ben Franklin Resources, ticker symbol BEN or Ben. It is a very good dividend stalwart. and I got $4.20 and then another $1.49 from them. I do have AGNC and I received $48.11 for them. I have another index fund and JEPI. I got $69.29, $1.63. I also have HP, 27.89 cents. And then I'm also holding, I absolutely love Fidelity. I'm holding their money market, which is SPAXX currently because there are no rate cuts. And this is definitely something good for long-term investors. They currently have a yield of around 5%. So you can forget about CDs that are going for about 5% and just park your money in your brokerage. Like the cash is literally 5% yield. So I would definitely recommend that just so you have more liquidity for when there are interest rate cuts, and there will be, even if it's next year, but you don't want your money tied up when you could be investing it and keeping cash reserves on the side. Got 18 cents from that. Also, I have a CEF, which is PDI and PTY. $7.99, 11 cents, and $6.38. I have Pennant Park floating rate cap, which was 92 cents, $2.67. I have Bank of America, which paid this month, yay, $24. I also sold some puts on those. I have Ares Capital Corporation, which is a great MREIT, $96.72. If you're looking for a high dividend yield, this one is definitely great. Looks like April 1st was a big dividend day for me. And then I have some more PTY and PDI in my account. So overall, not bad. Okay, so it looks like for this month, it was a little low. It was $552.24. So again, not bad. My average is about $1,100 per month. And mostly I'm focusing on dividend growth, high dividend yield. I have a lot in my investment ETFs and I have a lot for options as well. So this is about 25% of my overall portfolio, but it's not too shabby. Let me know in the comments what you would like to know about dividends. If any of the ticker symbols that I discussed that you would like to learn more about, let me know about that. But I hope you really enjoyed this video and it was a little bit educational and informative. This is not financial advice. I'm just letting you know about what I am doing for my portfolio just to hedge it a little bit more and to make it more balanced. And I absolutely love getting income. I love getting capital appreciation. And with that being said, I wish each and every one of you all the happiness, health, and wealth so we can all be millionaires and all be prosperous. I love each and every one of you. Bye, Raylaners.